This is the AI News Flash for May 15th, 4 p.m. UTC. First up, Anthropic is raising another $30 billion at a valuation approaching $1 trillion. According to the Wall Street Journal and PYMNTs, this is the latest example of AI labs absorbing the majority of venture capital funding. Annual revenue run rate exceeded $7 billion, and the valuation has doubled in just months. Claude Code and Enterprise Claude offerings are at the core of growth, with over 80% of Fortune 500 companies now using them. Anthropic's position as the clear number 2 behind OpenAI is firmly established. AI-related VC investment has already surpassed $200 billion this year, with the top 3 companies capturing over 70%. IPO speculation is also resurging, making this the largest financial event in the 2026 AI market and drawing intense institutional investor attention. The second story, semiconductor manufacturing equipment leader Applied Materials beat market expectations in Q2 fiscal 2026 earnings, confirming structural expansion in AI semiconductor demand. According to Quartz, revenue grew significantly year over year, adjusted earnings exceeded forecasts, and orders for advanced packaging equipment for HBM4 high-bandwidth memory reached record levels. The $725 billion 2026 CapEx boom from the 4 hyperscalers is providing direct tailwinds, with order backlog for TSMC, Samsung, and SK Hynix hitting all-time highs. Following ASML's strong earnings, this is another semiconductor equipment maker confirming the durability of the AI chip supercycle. As a critical leading indicator before NVIDIA earnings, institutional investors are reevaluating the structural growth thesis for AI infrastructure investment. Third story, America's largest health insurer, UnitedHealth Group, has launched a comprehensive transformation program to systematically track employee AI usage. Bloomberg exclusively reports that the company is building infrastructure to measure AI tool usage frequency, productivity gains, and domain-specific adoption across over 400,000 employees, then factor these into performance reviews and bonus calculations. This represents the spread of token maxing trends from finance and tech sectors to major healthcare players, following pioneering cases at Meta and Accenture. The health insurance industry has shown industry-leading AI implementation speed in diagnostic assistance, fraud detection, and customer service automation. This embodies the most important trend of 2026, rapidly widening AI gaps at the individual, corporate, and industry levels. Fourth story. The UK government has officially released guidance for companies on limiting risks from frontier AI models. According to Reuters, the framework jointly developed by the UK Department for Science, Innovation and Technology and the UK AI Safety Institute strongly recommends British companies conduct risk assessments, establish governance frameworks, and perform safety testing when deploying cutting-edge AI models. While not legally binding, this is expected to function as a de facto compliance standard in finance, healthcare, and government sectors, taking a lighter touch approach than EU AI Act regulation. This is a critical milestone in major power AI regulation frameworks, alongside the EU AI Act, 38 U.S. state regulations, and Colorado AI regulation amendments. It will directly impact the global expansion strategies of UK AI companies, including Anthropic UK, DeepMind, and Wave in this decisive moment. Fifth story. Major U.S. brokerage Charles Schwab has officially positioned AI as its biggest growth lever for the next 5 years at an investor day event. Investment News reports that CEO Rick Wurster announced AI-powered real estate planning tools, an AI advisor assistant, and a customer-facing AI assistant launching in June, with AI tools already deployed across all 33,000 employees. Last week's $65 million investment in Wealth.com and the 8,000-plus technologists building AI platforms were also announced, representing the latest example of industry-wide AI standardization in wealth management. Following moves by LPL Financial, Raymond James, Morgan Stanley, and Goldman Sachs, this signals a decisive moment in Wall Street's AI-native transformation. The strategic pivot, recognizing AI cannot fully replace humans but enables direct monetization through operational efficiency, is spreading across the entire financial services industry. That's all for this AI News Flash.